Welcome back to The Breakfast Show. You're joining me, Ben Ibrahim, in this week's segment of Know Your Rights. Today, we're going to talk about unit trust. What are your rights when you sign up? And here to help us answer that question and much, much more is the Managing Director of the Professional 5-Star Wealth Advisors, Ms. Sara Anom. Sara, welcome to The Breakfast Show and welcome to Know Your Rights.
Yes, thank you. My pleasure.
Okay, looking forward to the Raya break?
Oh, yes, definitely.
Okay, have no fear, a few more days. But Sara, about unit trust.
Yes.
A lot of people have a lot of perceptions, misconceptions about the trust fund itself.
That's right.
Can you just start by kindly explaining the basics, of unit trust?
That's right.
What it entails?
Okay. Now, when you invest in unit trust fund, people invest in unit trust because they want their money to grow. So if you, for example, put it in a fixed deposit kind of placement, you probably get a 2 to 3% returns. But now, if you put it in a unit trust investment, there is a potential returns of 10 to 15%.
Okay.
Now, if you compare 2 to 3% with 10 to 15%, you can see a vast difference in terms of returns over there. So when you see the returns is higher, definitely this investment is actually associated with some kind of risk. Right?
Yes, that's the key word, isn't it? Risk.
Risk. So risk can actually be managed. It cannot be totally eliminated, but it can be managed with a few strategies. That's what basically, it is. So people basically invest in unit trust because they want their money to grow at a higher rate of returns.
So basically, it's no different to a hedge fund or anything. You put some money, put some money in, and you hopefully, God willing, you will get some returns back.
That's right.
Okay.
It's just that I want to highlight that investment in unit trust is what we say is sort of a medium kind of risk. It's not like a very high risk as in Forex or in hedge funds. It's medium risk.
It's medium risk. Now, whether it's a lower fund or a higher fund, there is the key word is risk. Now, this is something that some consumers don't realize, and this is what we want to tap your experience about. What are the rights of the consumer from the perspective, like, let's just say you're the unit trust agent, you're selling me the unit trust fund, it doesn't work out according to plan, according to what you promised, and then the blame game starts going into motion. Now, in terms of accountability, the question I'm leading to here, in terms of accountability, who is responsible for this? Is it the actual financial institution or the unit trust agent?
Right, okay. Now, this is very interesting because we do get a lot of this, misconceptions about unit trust.
The perceptions of a unit trust agent.
Correct. Now, when you start to invest in a unit trust company, for example, you give a 10,000 ringgit to us. Now, basically, you get in touch with the unit trust consultant or the agent. You'll be given a presentation on how your money will be actually managed and all that. Now, during that point, it should be highlighted to you that investing in unit trust is a mid-year kind of investment period, is between 3 to 5 years.
Okay, so that's the range.
That's the range. So don't get into unit trust and hoping or wanting to get your returns very quickly within like 6 months.
People are usually quite impatient, aren't they?
Exactly. And when you do investment unit trust, it's not supposed to be for. It's not like a get rich quick scheme kind of thing.
It's a long-term thing.
It's a long-term thing. You're supposed to be keeping this money for your future, for your retirement, for your education plan. So by that virtue, it's already a long-term kind of thing. So we get investors who do not get returns, mainly because they don't really understand that this is actually a mid to long-term kind of investment period.
Let's look at the accountability, Sara. Now, unfortunately, there are some people out there who act as a so-called unit trust agent, and there's a bit of fraud involved and everything. That's just a part of the system. But to safeguard themselves from these type of people, or these actors or fakes or whatever you want to call them, what can the consumer do when they see an agent? To see if they're legit. Is there a license that a unit trust agent must provide? Is there a special type of contract that must be signed? And if the consumer does sign, what are they signing? See where I'm going with this?
Yes. So, when you meet an agent, please get them to actually present which unit trust company they are representing. And when they give you their business card, they should be printing out their license number.
So on the business card should be the license number.
Yes.
How many digits is the license number usually?
It starts normally, let me see, as 8 digits.
Eight digits,
So And if you are unable to get this, say for example, they say they're out of cards, they're supposed to be carrying
their license
card,
okay,
which is the FIMM card, Federation of Investment Managers of Malaysia. Authorization card for them to be selling unit trust.
Okay, okay. Let's talk about contracts. At the end of the day, some consumers don't realize they signed the contract, so they agreed to certain terms and conditions, and when the fund is not matured or the fund is not, they don't get the returns that they want, they do make a bit of noise, but they signed it. What kind of contract should be signed? Is there a standard contractual agreement that needs to be signed, or is it sort of tailor-made?
Normally, unit trust management company would have its own contract. When investors sign the transaction form or the application form, there is actually a contract attached to that transaction form. So basically, we state that unit trust investments are not guaranteed. So this actually already tell the investors that they should be doing some due diligence on understanding their rights, or understanding that unit trust is not something that they can get money or returns very quickly, unless if the market is actually on the uptrend, then there is a possibility of making returns faster than 3 to 5 years. And of course, the contract says that they can liquidate their money at any point of time. The only risk that they have to take on is possibly the market fluctuation. In case, the point that they wanted to redeem their investments, it was a down cycle, and of course they wouldn't make their money. So basically, the investors should be actually really understanding the whole thing, the whole concept.
Understand the dynamics of it before they go into battle.
Before they go into the investment in the first place.
But in terms of the stages before meeting up with the unit trust agent and everything, what should consumers know? I mean, I'm not an expert on unit trust, but I know very minimal. But there are some people involved. There's actually the consumer itself. There is the unit trust fund manager, which in your case would be you. But what is the technical term for the registrar and the distributor? Is that another person who's involved in this investment?
Okay, all right. Okay, when an investor or consumers get into a contract with a unit trust management company, it's actually a three-party kind of relationship.
So it is a three-party relationship. So that's the relationship game. Okay.
So
a lot of people think there's two.
Exactly. All right. Firstly, there's the unit holder, which is the consumer, and they deal with the unit trust agent. For example, I'm one of the unit trust agents, so they deal with me. And the money is not actually placed with me. So the money
is not placed with you?
No, definitely. We're not taking money. Then it's going to be diverted into the fund manager. So this is something like investors don't have to communicate with them, because we are the frontliner.
Of course.
And fund managers are the professionals who are actually managing the fund. So they have the expertise to make sure that the funds actually make that kind of returns for our investors. So they have the expertise. They're doing this like really on a full-time basis. They look at monitors on how the stock exchange performs. So the money is not placed with us. And if the money is placed with us, there's going to be a trouble there. Because, if you give a cash to anybody, they might misuse it. So that's why in unit trust, another party that a lot of investors are not aware of is the trustee.
The trustee?
Yes.
Okay, and what's their role?
Now, their role is to safeguard the investor's money.
Okay.
So you see, investment in unit trust is actually a pool of money.
Of course.
So people, you, me, everybody, they come and invest. So it's going to be directed to the unit trust management company. And you see, when it comes to the unit trust management company, it's a big amount of money. It's in millions and billions sometimes. So this money will have to be put in a list of assets, right? So that list of assets will actually be named under the trustee. So this is a very unique feature in unit trust, which you may not find in any other investment.
I just have to come to my final question, Sarah. We could have a whole show about this, but unfortunately running out of time. But your advice to our breakfast show viewers, our wonderful breakfast show viewers, if they would like to go into a unit trust anytime soon, what should they do? Their homework in terms of pre and post.
Right. I would like to, give this advice to the consumers if they want to get into unit trust investment. do some homework on who's the agent. I mean, a very basic homework lah. Basically, you know, whether that agent is actually giving a good presentation on that unit trust fund. And do not be always strict about the past performance, because past performance does not indicate that you're going to get the same kind of performance in the future.
Okay. Okay. Thank you very much, Sarah, for your time, for coming on to the Breakfast Show.
Yes, my pleasure.
It's been a great pleasure. I've learnt a lot about unit trust. But ladies and gentlemen, remember, do your homework pre and post, and make sure when you meet up with a unit trust agent, you find out that they have an 8-digit license number, because that is their practicing license. But coming up after the commercial break, have you ever found yourself having to check